the last time I was here in the Mansion House in March 2024, 2 years ago, when the Nikkei 225 index just hit a record high in 34 years. Now in 2025, both topics and Nikkei 225 has performed better than the US market, breaking the record many times. More investors are convinced of the growth story for Japan. However, this is just the beginning and more can be expected. One of the biggest factors is obviously that Japan is emerging from decades-long deflation. The cost-push inflation that started in early 2022 is gradually moving to demand-pull type, and we are seeing the virtuous cycle of wage and price increase. Japanese companies are maintaining strong business performance. The impact of US tariffs was undeniable, but many Japanese companies are showing positive increase in their profit this year. And Japanese companies are increasing their capital expenditure, investing in research and development, such as AI and on labor-saving related software. The investment plans show that a solid 10% year-on-year increase is expected for year 2025. Domestic institutional investors have voting criteria that encourage companies to improve ROE, reduce cross-shareholdings, and increase board diversity. And cross-shareholdings have significantly reduced to less than 10% of the market. Notable and growing segment is the Japanese retail investors who have started to shift their savings to investment under the NISA, Nippon Individual Tax Savings Account. Over the 12 years since the introduction, around 70 trillion yen was invested through NISA, but about 50% of that was invested in the recent 2 years after NISA was expanded significantly in January 2024. Close to 50% of the new accounts opened and the invested made through NISA in the past 2 years were under 50s. Approximately 35% of these investments, or 13 trillion yen, have been directly invested in Japanese individual stocks, mainly high dividend yield stocks. These structural changes in the Japanese economy are attracting more global investors. The numbers are clear. In total, in 2025, foreign investors' net purchase was 5.4 trillion yen, record high in 10 years. The trend continues to 2026 with 2.4 trillion yen net purchase in January only, which is the top 10 level in the past 10 years. US-centric portfolio was reasonable given the strong performance of the US market, but with the higher uncertainty, many investors, including US investors, are aware of the risk and are reallocating their investments away from the US and into Asian countries. And Japan has emerged as one of the alternative investment destinations due to the relative stability, liquidity of the market, and the size of the economy. TSE started to promote corporate governance efforts more than 2 decades ago in 1999. However, the real push came in 2013 when the late Prime Minister Abe made corporate governance reform one of the 3 pillars of the growth strategy for Japan. Since then, successors, including the current Prime Minister Takaichi, have recognized that private sector's growth is essential to the growth of entire Japan, and corporate governance reform has remained as integral part of Japan's strategic focus. With JFSA's leadership, Stewardship Code and Corporate Governance Code were introduced in 2014 and in 2015, respectively. TSE launched a series of new projects, and at the end of March 2023, TSE made a request for prime and standard companies management to be conscious of cost of capital and share price. After almost 3 years, the response has been positive. We hear from many investors that their dialogue with the management and the board has improved. Also, the record high number of M&As, TOBs, share buybacks, and the dividend increase all highlight that companies have higher awareness of capital efficiency. Corporate governance is the foundation of transparent, fair, and open market and investors' confidence. This is no end to the effort. To help facilitate the dialogue between companies and investors, we will continue in our efforts.
So what I think we have to say is the policy environment in Japan is incredibly supportive. Right? The government, METI, the JFSA, the stock exchange, this is one of the most unified, let's do good governance as a driver for growth frameworks anywhere in the world, if not the most. Right? It's absolutely great. And the progress that's been made in the last 10 years is phenomenal. The big companies, the companies that are looking globally, that are really embracing this best practice, absolutely flying. And then we see, to be honest, a large number of the listed companies still quite reluctant to make some of the change. And so what we're excited about, and I think investors are excited about, is how can we get the next tranche of companies to embrace some of this governance reform? Because if we can mobilize that capital more effectively, I think then there's huge opportunity. So again, I think the big framing for this revision of the corporate governance code, right, is that the fundamentals, I think, are understood. The challenge is in the execution. It's in the, how do we get boards in Japan to really do governance well? And so we should be using the code to try and encourage some of these different ways of thinking, enhancing independence, being a little bit braver maybe to take on some tough decisions. In order for Comply or Explain to work properly, a explanation, a diversion from best practice, needs to be something that the board and the investors agree is a better approach for your company. We're really excited about and trying to encourage, and we do a lot of work with director organizations in Japan, is trying to have more engagement between particularly your independent, your outside board directors and the shareholders. And that's one area where I think there's quite a lot of scope for improvement, because we don't see, again, certain companies we do, but in many other companies we see it be pretty rare actually for directors to talk to investors, and we think that probably needs to change. But to get that to work, you've got to have a real strong culture of independence, you've got to have really effective board directors, and you absolutely have to have dialogue between investors and companies. If an investor's coming with an idea, they usually because they genuinely think that's going to help. And I think we should probably try and remember a bit more that we're all on the same team, really, and everyone does have the same long-term goal. We might have different views on how to get there, but that constructive dialogue to drive what is the right answer for any individual company is critical.
We are positive on the EPS outlook in next couple of years. The first is inflation, as I explained. Second, that is much more focused on the high profitable business. Thirdly, a decrease of equity outstanding, both of which is related to corporate governance reform, I think. And also decrease of equity outstanding is clearly a signal of the tightening of the equity supply and demand situation. In the age of labor shortage, many corporate managers are focusing on much more profitable business. In that sense, gradually corporate mindset is changing along with the labor shortage and corporate governance reform. I think this year's reshuffling of corporate governance code is very important because it includes efficient usage of the resources, especially cash and deposit, is now debated. Because if you look at the left-hand side again, cash and deposit is now above 100 trillion Japanese yen. This is non-financial listed companies, which is almost double compared with 10 years ago. In the era of deflation, such a mentality for cash and deposit could be justified. But today, not deflation. So in the era of deflation, this is destroying the corporate value in real time. And if you look at the right-hand side, globally speaking, this cash over total asset ratio in Japan above 10% looks very high. In Europe, about 8%, and in United States, about 6%. So in that sense, this cash and deposit number over total asset could be reduced by 2 or 4%, which means more than 20 or 40 trillion Japanese yen of the cash and deposit transformation. In this sense, I'm curious on the outlet, balanced between the capex and M&A, and also return to shareholders are now getting realistic in the next couple of years. The target is also, I think, diversified. Previously, cash-rich company. Yes, still there are so many cash-rich companies as I explained, but however, there are additional trend or momentum. The one is such property-rich companies. So huge property owned in their balance sheet. Not only developers, but also retail companies or sometimes Masanori and so on. In that sense, there are a variety of the, how can I say, maybe a capital inefficiency anyway. They are the target and the activist one. And also looking at the global peers, in United Kingdom, for example, this ratio is greater than 2%. In that sense, as far as the Japanese market is having such inefficient capital structures, I think the upside momentum of this activist presence is likely to continue, along with activist fund involvement, partly because of the company's counter reaction, something like sometimes a buyback or sometimes a dividend hike, or otherwise this disclosure of the mid-year management plan, including the reshuffling of business portfolio and so on. In that sense, there is so far some constructive side effect on the corporate management.
London holds a special place for those of us involved in the issuance of Japanese government bonds. That Japan conducted its very first overseas JGB offerings, a 10 million sterling issuance that marked the beginning of our long relations with international investors. The JGB market has changed enormously since then, and today it is one of the world's largest sovereign debt market, with outstanding general government bond exceeding 1,100 trillion yen, roughly 7.3 trillion US dollars. All issuances is now in yen, and with the rise in interest rates in recent years, we have seen a noticeable increase in inquiries from overseas investors. And the Japanese spread has been moving somewhat similarly with other countries since then. While we say so, we acknowledge that structural demand for super long bonds have changed. For many years, life insurers provided strong demand as they extended duration to meet regulatory requirements. With compliance now largely met, the additional demand of the lifers has declined. So to respond, the fiscal year 2025 issuance plan, which we decided, reduced 30 and 40-year bond issuances. And following the market volatility after the US tariff announcements, we further shortened average maturity by reducing super long issuance and increasing short and medium-term bonds, as well as retail bonds last June. And since the formation of the Takaichi cabinet last October, there has been speculation that fiscal policy might become expansionary. However, we have kept the increase in JGB issuance plan, as you can see, quite modest, and in fact, reduced the size of market issuances. So what is the Cabinet aiming to achieve with the fiscal year 2026 budget? The central objective is to build a strong economy with targeted investment in defense, AI, semiconductors, natural resources, green transformation, etc., while maintaining fiscal discipline in securing funding for those strategies. And let me also stress that the Prime Minister Takaichi and also the Finance Minister Katayama has been quite clear in their commitment to stick to the fiscal consolidation. For the fiscal year 2026 initial budget, which was formed last December but yet to be discussed at the Diet, it achieves a primary balance surplus for the central government's general account. And looking ahead, the primary balance both depends on whether Japan grows at around 1% in real terms as in past trends, or succeeds in shrinking to a new economic stage with around 2%. And our clear aim is the high growth scenario supported by proactive economic strengthening. And with regard to the trend in the share of JGB holdings, the Bank of Japan's share of JGB holding has begun to decline as monetary policy normalizes, and this trend is expected to continue. As the BOJ proceeds with the exit strategy, securing a stable and diversified investor base becomes increasingly important. We are preparing to introduce floating rate JGBs, anticipating renewed demand from banks, and we are expanding the scope of retail JGB sales. Foreign investors' participation has also been rising since early 2025. With higher interest rates, both real money investors and hedge funds have increased their presence in JGB markets, contributing to improved market liquidity. This makes opportunities like today especially valuable dialogue for us. So we will continue to monitor market developments closely, engage actively with market participants, and pursue appropriate JGB management policy as the Japanese government.
JPX is not only operates a cash liquidity market, but also offers Japanese yen interest rate products. The Osaka Exchange in the right middle red box on the left-hand side of our group lists various interest rate derivatives such as 10-year and the 20-year JGB futures and 3-month TONA futures. But OTC JGB cash bond clearing, its trading is mainly done through voice and brokerage, providing essential funding and liquidity for yen interest rate trading. JCC clears about 80% of the market, mainly JGB repos. There is no regulatory clearing obligation, but participants use JCC for their clearing facility. Daily average clearing volume has been increasing significantly in recent years. 10-year JGB futures, which celebrates the 40th anniversary last year, is Japan's most liquid rate products and served as a benchmark. Its liquidity has increased significantly since 2022, and the BOJ normalized the monetary policy. Today, open interest stands over 150,000 contracts, grew by 50% since 2019. Over 70% of the trading volume comes from foreign investors, and 30% from HFTs, making the market highly liquid and spread tight. JCC provides clearing for yen interest rate swaps across all tenors with high liquidity provided by diverse participants, including Japanese and foreign investors. There seems to be a gap between the optimism that government is trying to produce, and at the same time, there's sort of a caution or uneasiness in the marketplace. What exactly is the responsible, proactive fiscal policy?
By proactive, I think we are trying to do short-term and also medium to long-term proactive fiscal policies. And for the short term, the government thinks that it's really important to support those kind of households or corporations to tackle the increased price rises. But for the medium and long term, it is really, really important to invest in strategically important growth areas. And we have identified 17 areas that we think are strategically important, including defense industries or AI, semiconductors, energy, and such. And we're trying to focus push our investment in those kind of things and use our limited resources productively. And for the responsible part, what the Takaichi-san is trying to do, that we are planning to keep the raise in the expenditure to be less than the increase of the GDP growth.
The clear indicator of this is the growth path that we'd like to see. Is there any element that we can identify that the element is just really visible? What sort of consideration has been given to this the most recent JGB issuance plan?
When we consider about the JGB issuance plan, we have a couple of rounds of discussions with our primary dealers and also with the investors in Japan. Their view on the market, as well as how much do they really want in each end of the curve, in each terms, as well as we see the mid to long-term changing dynamics in the JGB market, considering the changes in regulations or the what would come up in the market in the future. And also, we also see the cost of issuance on our side as well.
Are you thinking of any strategy to show the varieties of products to be floated in the marketplace so as to attract more liquidity?
New product that would keep them easier to control the risk of rising interest rates.
Yeah, the floating rate.
So the introduction of, for instance, the floaters, or maybe changing our model for the individuals JGB sales. Because up till now, we have been selling individual JGBs only to the retail investors, the individuals. But what we're trying to do from next year is to open it up to not just to the individuals, but to some companies or some institutions. For instance, non-profits or the companies that are not specializing in investment, or the apartment associations that they keep quite a bit of sum of money to prepare for the next maintenance that comes up in 10 years' time, in 20 years' time. We're hoping that with the rise of interest rates in Japan, there would be more individuals interested in investing in JGB, and we would be happy to, for instance, improve our products or maybe introduce new products or the way we sell to get more attraction from the individual households in Japan.
Do you plan to do anything to appeal to foreign investors in any way? Is there any new strategy that you try to employ vis-a-vis foreign investors?
I think their intentions could be different depending on each investor's style. But I can assure to anyone here that we have a big sovereign debt market, which is maybe the third in the world currently, which is quite liquid, safe. We have regular communications with the primary dealers, and also we're trying to, for instance, become more flexible in considering about our issuance plan. I think we're trying to be flexible, open with the investors, and trying to hear from you or the people in the JGB market to make the market more attractive. So we're committed to the fiscal discipline, and also we're committed to the communication with the market to make this JGB market more attractive, more liquid, and more trustworthy.